all Tesla news for the week ending January 23rd. Welcome to My Tesla Weekend. Tesla stock finished the week down 0.5% to 846.64, essentially flat, compared with the Dow Jones Industrial Average up by a hair, essentially flat, the Nasdaq up over 3%, and the S&P 500 up about 1.5%. Oppenheimer has raised its price target on Tesla to $1,036, largely on the strength of what they perceive as a significant advantage in the move toward autonomy. Specifically, the capability of collecting real-world driving data in shadow mode across the fleet, which allows for billions of miles of data to be collected to feed the hungry algorithm. Anyone familiar with Tesla knows about the explosive stock gains over the past year, but to humanize the story a bit, two struggling chefs in California used their $1,200 stimmy checks in 2020 to buy shares of Tesla, and they just cashed it in for $17,000 to open their own kitchen. On the flip side of this story, you find Jim Chanos, who has long been a Tesla short seller and skeptic, who remains confident in the company's increasingly unlikely failure, though he's lost the appetite or perhaps the capacity to short the stock any longer, because Tesla bears suffer short sale loss in 2020, according to S3 Partners. As pointed out by S3 Partners, a predictive analytics firm, Tesla short sellers lost over a 40 billion smackaroos in 2020 betting against the innovation juggernaut. And that, my friends, is a very tough business to be in. On the flippity-flop, we got reports that Alaska's Department of Revenue raised its stake in Tesla to about 127,000 shares. It's not clear when in the fourth quarter these shares were purchased, though it is clear that they paid a far less than the $104 million price tag they are worth today because, math. The Louisiana State Employees Retirement System opened a large position in Tesla as well, with the purchase of 80,900 shares in Q4, similarly buying in well below the current price. And both of these may be due at least in part due to Tesla's inclusion in the S&P 500 in December, as it may now be viewed by some fund managers as a more credible investment. While neither of these are as committed as an index fund, they are vastly more likely to hold positions over the longer term than someone looking to make a quick buck. Things are heating up in Texas, though apparently not in terms of weather just yet. A shipment of massive crates just arrived from Idra, which is the Italian company that makes the MegaCasting machines used in Fremont and Shanghai. Let's take a look at Jeff Roberts' video here. They are on site, right down in this corner here, in the area where the castings will be done, suggesting Giga Texas may be closer to building Yo Cybertruck than previously suspected, at least by some. I take a lot of criticism in my weekly Giga Texas progress tracking and prediction videos from skeptics, absolutely certain that the building alone won't even be finished this year, let alone the possibility of seeing any production. Well, this week's update is going to be a mind blower, so make sure you're subscribed if you want to see that one when it comes out in a matter of days. I also have a two-part video coming out in a few days about the Cybertruck, so be on the lookout if that interests you. My Patreons will get to see it first, because they are the reason I'm able to dedicate so much time to these deep dives, and a thank you. Tesla Model Y deliveries in China have begun, and considering the fairly substantial backlog of orders, as well as the vehicles produced prior to launch, this quarter is likely to be Tesla's best, despite Q1 historically being the weakest for auto sales, even for Tesla. Reports out of Australia suggest the SR Plus and long-range variants will come from the China factory, while the performance models will continue shipping from Fremont, at least for now. I expect them to switch to Shanghai Performance 3s once they're available due to the simplified logistics of shipping from a single, much closer factory. With all this production and demand news, Giga Shanghai appears to be continuing their expansion eastward into the former melon farm, which is already moving very quickly in what a lot of us are calling Phase 3. Since Giga Shanghai has announced intentions to make additional models, specifically a less expensive variant, the fabled $25,000 Tesla, they're gonna need more space. Giga Berlin has secured tentative approval to make batteries, which comes as no surprise. As with the site's, oh, look at that. There we go. As with the site's building permits, it is a tentative approval which will allow Tesla to move forward at their own risk, meaning if permits are not secured, they'll have to restore the land to its previous state. Not an exciting prospect, but so far there's been no reason to doubt these final approvals will be forthcoming. New York Times published an interesting report looking at an MIT study which found that EVs are obviously better for the environment than ICE cars, internal combustion engines, no bueno, and are often less expensive to own over their lifetimes due to charging savings and reduced maintenance costs, despite their higher sticker price up front. Through the first 3 quarters of 2020, Tesla increased their market share among battery electric vehicles to 26%, almost doubling the 13.5% they had in 2017. 2017, man, that feels like a million years ago. While it's fair to say the competition is coming, and in many markets it definitely has, Tesla will remain a moving target other car makers will find difficult to catch. We know Giga Shanghai will dramatically increase production this year, and Gigas Berlin and Texas may crush those numbers in 2022. Speaking of the competition, Volkswagen will soon have to pay a €121 million fine for missing their 2020 CO2 emission reduction targets. This is a real hoof in the sack for Herbert Diess as they try to get as many of the honestly impressive ID3 and ID4s into the hands of consumers. But it shines a light on something important. VW can sell these cars at a loss and still come out ahead because of the looming certainty of massive fines if they don't. Those who look at Tesla's financials and suggest that the profits are not real because they include the sale of ZEV credits to other companies, they are missing the fact that these regulations work both ways. If Fiat Chrysler and Honda were not paying that money to Tesla, they would have even less profit on their books. If VW isn't selling as many EVs as they possibly can, even at a loss, they would similarly show less profit. And this isn't winding down. The EU recently increased their 2030 greenhouse reduction targets with the phase-in period beginning this year. And while that's good news for EV sales overall, Tesla has announced a price reduction for Model 3s sold in Europe of about €3,000, or about 3,600 of them flat green Washingtons. For the curious, I'm finally launching my Twitter. I had debated about starting a whole new one for this, but a lot of my fans from my past projects are likely to be fans of this as well. So check me out at 4K Podcast, and I'll start updating that. Let me know if there's something I missed or misunderstood. Stay tuned, stay juicy, and I can't wait to hear from you clever robots in our cleaner, greener future.